Um, okay. I want to talk a little bit about macro. I put a post on macro on X, and I just thought it'd be good to get a rant on macro, um, because I think I have some clarity on this now. And I'm just going to expand on kind of what I said on X. So I think the most important thing right now in macro is the price of gold. So we're up to $3,400 an ounce in gold, and there's no war going on. Yeah, there's the Ukraine war, but there's no new war. This is not Gaza. This is not some sudden situation. This is the world waking up to the fact that they no longer trust the United States, they no longer trust the US dollar, and they no longer trust Donald J. Trump. Um, and I think it's really significant. And I think, you have to really take a look back. Let's just step all the way back down to step all the way back down to uh, the GFC, the Great Financial Crisis of 2008, 2009. And, we recovered there in 2010. And so we've had now 25 years or 24 years of recovery now, punctuated by COVID, a year, of COVID in which the Fed kind of massively printed. So we went down, we massively printed, we went back up. If you look at that stretch of 25 years, the place to invest was US tech stocks. That was the investment. They went up, if you look at the QQQs, right? They went up 10x from early 2010 or even late 2010 till now. We've had a 2010 to 2024, 25 movement of 10x in the QQQs. And that is even better in yen terms, right? So the yen has lost 60% of its value since then versus the dollar. And the euro has lost 30% of its value since then. Both of those two are kind of coming back now. The yen's coming back, the euro's coming back. But I think you have to look at this from a yen perspective. So what do you have from a Japanese perspective? Well, most of Japan was just hiding out in JGBs, Japan government bonds, and savings, that's yielding negative interest rates for the last 20 years. That's most of Japan, right? So if you followed that advice, you made zero over the last 24 years. Now, if you put your money in US tech stocks, you made 10 times your money, plus you made 60% more on foreign exchange. So you pretty much made 20 times your money by putting your money in the US. So the US has been a fantastic investment for Japanese people with money who had money in 2010. So the Japanese, the Gulf states, and rich Europeans, right? Even though they rail about the U.S., they've invested along with the Japanese, along with everybody else in the U.S. And what happened in 2010? Well, just as we were emerging from the GFC, we really had the real adoption of cloud computing, right? So we had finally, AWS and Amazon and Meta and all these other companies, Netflix, right? We had this kind of global digital economy that was growing and really just took off in 2010. And so for the last 25 years, last quarter century, sorry, 20, I'm getting me confused. The last 15 years, last 17 years since 2010, we really had this birth of the digital economy, right? This digital economy and these digital products, right? This has just been an amazing trend. And if you weren't involved in that trend, you got nothing. If you were involved in Japanese real estate, you lost a ton of money. So you had to get on the right train. Did you get on the right train? Well, some people did. Some Japanese did. They went and they bought U.S. equities with, and they could have bought the S&P 500. It wasn't the best trade. The S&P 500 only did well because of the tech component. You strip out that, didn't do so well. Now, Europe and Japan couldn't participate locally in this. And so why? Well, partly because they didn't believe in it. So the US tech companies were in a unique position. They had been they had that 10 years from 2000 to 2010 to kind of recoup, to regroup, to build out this cloud story. In Europe, we're all sipping espressos on in the town squares and having expensive lunches in French restaurants, and nobody was building out cloud computing in France or in Spain or in the UK. It really wasn't happening. And so the reaction of the EU to all this has been, great, let's put on a banner saying, do you accept cookies? And then suing companies like Google for monopoly or for not following so-and-so guidelines of the EU that are dictated in Brussels. So the entire EU has been trying to fight the story of US tech growth. And at the end of the day, the rich people decide, what, I'm not going to, I'll go along with whatever the government's saying, but I'm going to put my money in Microsoft. I'm going to put my money in Amazon, put my money in Apple, right? And even people like Buffett pretty much gave up, and they said, you know what, I got to invest in Apple. I'm not even a tech guy, but this is where the action is. I'm going to put my money there. So all the money went into U.S. tech stocks, right? And the Chinese, who are, really busy taking over the world in those 17 years, building all the actual factories and all that stuff, that was actually built out during that period. Because the U.S. wasn't going to do that, and the U.S. wasn't about ready to go and build these environmentally polluting factories, and we weren't set up for that. We were set up to win in this cloud computing war, but that's all we were set up for. We weren't set up to win in the world of atoms. We were just really did well in the world of bits. So, the Chinese took over that part of the world, and they were making all this money by doing it. They were getting all this investment, and they had this incredible trade surplus. They were taking it back, and they had to invest it somewhere. Well, they're investing it back in themselves, and they're also investing it back in the U.S. in the form of U.S. stocks, right? Mag 7. So that's kind of where we were. Now, I thought back in November, I thought this was just going to continue for another decade. Right? I thought, okay, we're going to have more of the same, right? We're going to have more U.S. tech company domination, and more people just sort of liking the U.S. brand, right? Like, you know what? The U.S. brand was not great under Carter, but it came back under Reagan. The U.S. brand was shaken by the GFC, but it kind of came back, and everybody started re-believing in these tech companies. And look, I think the U.S. brand got seriously damaged by Trump 2.0. And why was that damaged? I think there's a couple things. It started by, Trump's like meme coins and things like that. It just, I think if you're in the EU, that didn't sit too well, right? It's sort of like, wait a second, we're investing in this. What? And then, on Liberation Day, we had this like, okay, the US is telling everybody to F you, everybody in the rest of the world, saying, you're going to have to pay us some tariff, which we're not even going to tell you. You're going to have to come to the table. We're going to negotiate these tariffs one by one with you guys, and we're going to win, and you guys all owe us, and go kiss the ring. Well, I think that scared everybody. You really got to look at it from a European standpoint or an Asian standpoint. I think that was a very scary thing to say. And on top of it, saying, I love Putin, and he really means well in Ukraine, and so, and we don't plan on even supporting NATO anymore. So I think we've damaged the world order here. We've lost trust in the U.S. And when you lose trust, it's kind of like if you cheat on your significant other. I'm sorry, honey. I screwed up. I went with a prostitute. I went with a stripper. I went with a porn star. But I'm good now. That's a hard one to kind of like. It's a hard one to go back to. So I feel like that's kind of where we are now. Is this the art of the deal and all this stuff? Maybe, but damage is done. And, the Europeans are now sort of wondering, they should invest in the US at all, or if they should go to Disneyland on vacation, or what is the and as a person who spends a lot of time in Europe, I have a place in France. I go to Europe quite often. I grew up in France. Je suis français, en fait. Si vous êtes français, on peut parler en français. But, I have a little bit of a French brain in my brain as well. And I look at the world and I'm like, from a French perspective, I kind of don't like what's going on right now. And this American first, fine. But, I thought we were friends. I thought the US was, a safe place. It was sort of like the safe big brother, right? That you really want to invest in. And so, I think a lot of these people are really having second thoughts. And so where do they put their money? Are they going to put their money in a French company or in a Chinese company? Probably not. What they're looking for, and they're trying to say, is like, look, I need somewhere safe to park my money. And where is that? Right now, that is, no, I do not think Brigitte Macron is a man. But I've seen the conspiracy theories on that. I think everybody's sort of sitting there going, I'm just going to invest in gold. And so we have gold now that is up 30% since the election. That is a remarkable, absolutely remarkable thing. So let's just take a look at the gold chart. Let's take a look at that gold chart real quick. Okay, let me go to my charts here. Okay. You have to share it here. Okay. Oh yeah, I am sharing everything. Okay, great. So let's now look at this gold chart real quick. This is a remarkable chart, right? Here we were at 2570 on November 15th, okay? And now we are almost at 3,400. We did touch it today. So we're up 30% in something that has no yield, that has no long-term story. Why are people buying that versus buying QQQ? Well, you tell me why. I think basically the U.S. has lost faith, right? We've lost faith. Our big friend has kicked us in the nuts and said, "Hey, you guys are on your own. By the way, you guys are on your own with Ukraine. You guys do whatever you want, but we're not paying for any of that. And you guys got to pay for us. You got like your movies. We're going to charge you on that right now. Like, good idea. And you have no way of forecasting the next what Trump's going to do over the next 12 months. No way. He may come out with a new tariff. He may come out with a new rule. He may have a new law. No French people allowed in the U.S. Like everything is possible. So in a situation like that, what do? If you're rich, you buy gold. And, that story is moving right now. And I think the Bitcoin story is going to move too. Now, the other thing is these governments, they're not sitting there doing nothing. They're cutting interest rates, right? So from their perspective, they're about to go into massive deflation, right? Because the Chinese are about to flood their economies with cheap goods. So while we are about to hit a inflation wave with like every single thing that the U.S. makes is going to go up. All the intermediate parts are going to go up. Cars are going to go up. All this stuff's going to be heavily inflationary in the U.S. I will talk about Solana real quick. Everything in the U.S. is going to go up. And in Europe, everything's going to go down. So now we have a deflationary economy, which is a free market. It's going to be relatively free market economy. It's actually going to look pretty good for European equities, okay, which are pretty cheap relative to U.S. equities. And so if I'm a European now, I'm going, do I want to invest in a world where you have stagflation in the U.S., the Federal Reserve, which is definitely on hold, not cutting interest rates in 2025 much at all? Or do I want to invest in Europe and in a world where we have deflation, where we have lower interest rates, and maybe I'll go Europe, right? Maybe I'll go local. Could be good, okay? Or do I even just want to invest in gold or Bitcoin, right? So I just think we have this realignment of forces right now. And I think, people are repositioning their assets for the next 20 years and the next decade. And so if you're thinking not just a week at a time, a month at a time, or just even a year, but you're thinking a decade, where do you want to park your money right now? Okay. Well, I think in 2010, the cloud story was not clear. Like if you go back to 2010, you're like, was it clear that Amazon was going to kind of come back from where it was? Like, let's take a look at Amazon. That might be a good one to take a look at. Let's take a look at Amazon. Was it clear that Amazon, okay, let's take a look at Amazon. Let's take a look at Amazon. Was it clear that Amazon was going to recover the way it did? No, it was not. Okay, so let's go back here. Okay, in 2010, Amazon was trading at $7. Okay, adjusted, right? So it was trading at $7 a share, right? $7. Now it's at $186. Okay, so it's gone up 20 times. We are up 20 times in Amazon. Okay, even in 2011, it was trading at $10. It's up 20 times. So that tells you how strong this trend was, right? And sure, yeah, we dropped. We dropped by not even by half, right? We dropped by 60% here, and then we just right back, okay? But how are you going to find something that's going to grow 20 times? Are we going to grow 20 times now from here? I would argue no. And the reason I would say no is this story has been played out. Everybody who's on Amazon has already been on Amazon. So anyways, that's my video. I hope you enjoyed it. I will talk to you.